that's a 10% drop. That still wouldn't erase 100% of the dollar's rise since January of 2021, but it would erase most of it. And I think that's going to be an initial support area for the dollar. And I probably think that the markets won't be particularly concerned about the dollar as long as we're above that 90 level. But I think once we crack it, you're going to see some type of panic setting in the bond market or in the foreign exchange market. And if it doesn't happen at 90, there will be a breaking point somewhere along the way. Remember, the record low for the dollar was just above 70 back in 2008 before it was saved, ironically, by the financial crisis. The next crisis is really a currency crisis, a US dollar crisis. I don't know if it's going to take a break to all-time record lows to precipitate that crisis, but if that's what it's going to take, that's what it's going to happen, because the dollar is going to take out that low. Either that's going to happen and cause the crisis, or that's going to happen as a result of the crisis. But one way or another, we're getting the crisis. Now, the gold market should smell that out well in advance. And I think gold will start hitting new highs before the dollar hits new lows. In fact, long before the dollar hits new lows. In fact, looking at what happened with the gold stocks this week, very significant gains. The GDX was up 8.7% on the week. And the juniors, the GDXJ, was up 9.5%. So as I was saying on my last couple of podcasts, these stocks have really been beaten down. And even with this rally, they're still a good buy. I mean, they were a better buy on the last couple of podcasts when I pointed out how cheap they were. Well, they're a little less cheap now, but it's still not too late by any chance, to buy these things. I mean, it's still really, really early. Now, of course, the gold stocks weren't the only stocks that were up on the week. Pretty much everything was up on the week. The NASDAQ 100 hit new highs, not record highs, but new 52-week highs on Friday. Interesting enough, the NASDAQ and the S&P closed negative on Friday. Now, I don't know that this was a big enough reversal to constitute, an end of this. NVIDIA hit a new high on the day, a new record high for NVIDIA. It also closed down about 1% on Friday. But again, it's too small a decline to say it constitutes some kind of significant reversal. We just have to keep our eye on it. Eventually, there is going to be a reversal. The ARK Innovation ETF was up 11% on the week, even though it fell 2% on Friday. So there was some profit taking on Friday in these tech stocks, even though, let's say the Dow was up 2.3% on the week. It was also up on Friday. I think it was the only of the major indexes to be up on Friday. Russell 2000 also down on Friday, but still up 3.6% on the week. The biggest loser, though, on Friday was Bitcoin. The GBTC Bitcoin Trust still eked out a 0.3% gain on the week, but all of its weekly gains, or most of them, were wiped out by a 7.6% plunge on Friday. In fact, there was a lot of volatility in Bitcoin Thursday and Friday because you got a court ruling that Ripple was not a security, which is a good ruling. And that good news sent Ripple soaring, and it took the rest of the crypto market with it. Bitcoin got back above 31,000. But of course, whenever there's so-called good news in crypto, there's always a pump that is immediately followed by a dump. And that's exactly what happened. I think Ripple dropped about 25% on Friday, took the rest of the crypto market down with it. Bitcoin, which had gotten above 31,000, sold off to below 30,000. I mean, it's back above that level now as I'm doing this podcast, but we had all of that volatility. There's been other news, of course, that has been driving Bitcoin. One is the prospects of an ETF, a Bitcoin ETF that is going to be brought out by Blackstone. And I was listening to the CEO, Larry Fink, who was on CNBC doing an interview, and he's turned into a typical Bitcoin shill. This is the same type of conversion that guys like Kevin O'Leary made with FTX, because Larry Fink used to be a critic of Bitcoin. But now that he thinks he can make some money off of Bitcoin, all of a sudden he's a big pumper. And so he was on this interview on CNBC saying some absurd things. So first of all, he said that the cost of trading physical gold was absurd, or buying gold. He didn't say trading, buying. He said the cost to buy physical gold is absurd. And so he was trying to say that ETFs democratized gold and made it so the average guy could buy gold because it was just prohibitively expensive to buy physical gold, which is complete nonsense. I was selling physical gold, before that ETF came into existence. And the cost to buy gold is not absurd. It's 1 or 2%. I mean, if you buy from a reputable dealer like Schiff Gold, that's all it costs. That's not high. And then you can store it yourself. It costs you nothing. Gold has already been democratized. It didn't need the ETF. What the ETF did was made it easier, let's say, to buy it in an IRA, or it made it easier to trade gold. Yes, if you want to day trade gold, yes, the cost of day trading 1 ounce maple leafs, yes, that would be prohibitive. That would be absurd. But I was never selling gold coins to day traders, selling gold coins to people that want to hold on to them for a long period of time. In that case, it's cheaper than the ETF because the ETF has a storage fee that you have to pay. So if you're holding on to an ETF for 10 years, that's a lot more expensive than holding on to your own gold maple leafs. But so what Larry Fink was really talking about was that the ETF made it easier to day trade gold, not own gold. But now he's trying to say the same BS for Bitcoin. This is the irony of it. He was talking crypto, not so much Bitcoin. But he said that this ETF was going to do for Bitcoin what the gold ETF did for gold, because he said the cost of trading Bitcoin on your own is absurd. It's so expensive and so cumbersome to actually buy crypto that they're doing everybody a favor by creating this ETF that now lets everybody buy crypto who couldn't buy it before, which is nonsense. The whole value proposition for Bitcoin or other crypto is that it eliminates the need for a third party. It eliminates the precise ETF that Larry Fink is creating that he thinks adds value to Bitcoin. If he's going to argue that Bitcoin is too expensive and too cumbersome to actually trade, and therefore you need an ETF, he's just undermined the main value proposition of Bitcoin itself. And so if Bitcoin doesn't have any value until you put it into an ETF, then what exactly are you putting into that ETF that has value? You're putting nothing. The whole argument is absurd because it contradicts itself. This ETF is going to have a custody fee. There is no custody fee to store your own Bitcoin. So why the hell do you need to pay Blackstone money to store something that you could just as easily store yourself for free? Look, he does not believe in Bitcoin or crypto or anything else. He's motivated by a desire to make some money off this ETF. And that's the reason he's flipped. Just like Kevin O'Leary got paid by Bankman-Fried a bunch of money to go out and pump FTX, even though he didn't even believe in it. That's what's going on with Larry Fink. This guy is laughing all the way to the bank. He's out there pumping up something that he has no interest in owning himself. He doesn't believe in. He's just trying to make a buck. This is what Wall Street does. This is the history of Wall Street. They care about themselves, right? That's their main mission. And they've been protected by the SEC. They've been protected by FINRA. People think, these guys are all government regulated, so they must be okay. There's a watchdog there to make sure they don't rip me off. No, you got to be your own